Hello and welcome to today's channel. Today's channel is going to be about higher highs and higher lows, lower highs and lower lows. A lot of people hear that expression all over the place, but they really don't understand or know what it means. So basically, I'm going to try to explain what higher highs, higher lows, lower highs, and lower highs mean. So basically, it's the power of price patterns. So you can see right here. Let's start the video. So what is price pattern? Price pattern is basically just patterns that are in the market. So we have our continuous patterns on the left. We have our reversal patterns on the right. Continuous patterns can be our triangle patterns, our core 1, 2, 3 trend patterns. We have our flag patterns, or like it's basically called our wedges. So those are just another ways for us to call wedges. We also have our double tops and double bottoms, or our M's and W's. We have 1, 2, 3 reversal patterns, which are also our traps, M's and W's. We have our head and shoulder patterns. We have our inverted shoulder patterns. So basically, we just have different patterns that are going to tell us what's happening in the market. Basically, is the market going to go up and continue with this pattern or its current trend, be it a bullish trend or a bearish trend or a buyer's trend or a seller's trend? Or is this a reversal pattern where price was now bullish, now it's going to be bearish, or it was bearish and now it's going to be bullish, or it was selling, now it's going to be buying, or was buying, now it's going to be selling off. So now let's take a look now. We have an uptrend. As you see now, we start at our lowest point of the trend. We're going to go to our high, our new higher low. Why is this called a higher low? Well, because it's higher at the price point as the low that it was before. So say this is now $2. We went up to $4. We come down to $3. It is lower than the $4, but it's still higher than the $2. So that's basically what that means. So we have our $2, we went up to $4, we came down to $3, we went up to $6, we came down to $5, we go up to $8. So that's why we have the lowest point of it, which happens to be our $2. I'm keeping the number simple. We go up to $4. We're like, oh man, we made a lot of money, sell it off. Now we're over here at $3. People are like, yo, that's pretty cheap. It's cheaper than $4. Let's buy it up. So we're going in. So now we're up to $5. We like, oh my God, money's already made. Take the money out. We go down to our $5 here, and then we come back up to $8. So it's basically, we're just continuing in a pattern. We come up, we made money, we take our money out, we see that it's low, we buy it up, we made money, we come down, we make money, and that's basically how the market's going to work. So we have our low, our high, our higher low, and then our new higher high because it's higher than the previous high, and our new higher low because this is now higher than this, and then higher than this, and then we have our new higher high because it's higher than this and higher than this, and that's in our upward trend. Now we have our downward trend. So that's going to just be the opposite. So we have our high. We started at $10. Then we went down to $8. We come up to $9. We go down to $6. We come up to $7. We go down to $5. You see where we started? And that's pretty much how the market kind of evens itself out. I always like to use the banana scenario, that a banana at 89 cents people will buy. Nobody's going to buy a banana for $49. But if a banana is at $1.25, which will be over here, it's kind of high, but we'll still buy it. 89 cents is a sale. We're going to buy it up a lot. And then guess what? Demand goes up for it because we'll run out of bananas, and then the price of bananas goes up. So now we have a lot of bananas here and we need to sell them off. So we come down to a low, we're running out, go a little bit higher. Now we're really running out, go a little bit lower, really running out, and now we barely have we have so many, we need to sell the rest of them off, and that's basically would be a sale. So basically, see, if you see at a clothing supply store, you see that sweater used to cost $100, now it costs $49.99 because it's a sale, because they're trying to get rid of it. So we started at our high, we come down to our low, our lower high because it's higher than the previous low. We have our new lower low because it's lower than our previous low, our new higher low that's lower than our previous higher low, and our new lower low because it's lower than all of these positions. So let's take another look at this now, okay? Starting point, higher high, kind of understand where we're going with this. Higher low, higher high, higher low, higher high, higher low. This is the highest point that we have here. And now we start to reverse now with our lower low, lower high, lower low, lower high, lower low, lower high. And then we get to our lowest point here. If you notice also too, this happens to be a head and shoulders. Take a look at our head and shoulders video to explain exactly what that means. So this would be a simplified pattern. Okay, when we see this pattern, it's basically real simple, and that's why we call it a simplified pattern, because it's just simple. So watch, we have our starting point here. We have our new higher high, higher low, higher high, higher low. Now note, the higher low is a previous higher high of the position. See that right over here? You could draw a line directly across. Then we have our new higher high and our new, what would that be? Yes, higher low. Guess what? Even with the former higher high. This is how we get our support and resistance lines. So we've noticed that these are even. So that's one line of support. This would be a line of resistance until it's broken. Now this is the new line of support. And now this is now the new high. And that's how we get our support lines, looking for those higher highs and higher lows, lower highs and lower lows. And that's where we put our lines there. See how this is going? So we have our starting point, high, higher low, higher high, higher low. Another higher low is higher than this position over here, higher high, new higher low. We have our equal high because it came over here. This will also be our M formation. M formation lets us know that the market's going to go what? Down. We also have M formation and W formations in our channel. So take a look at those videos after this video. Okay, we have our new low position over here. We have our equal low over here. If you notice, this is a what? This is a wedge. This wedge coming from an up, we have a falling wedge. Guess where we're going to go? We're going to go up now. So you see how we're putting all of this together now? Okay, falling wedges videos are also on our channel. So we have our higher high, higher low, higher high, higher low, higher high, higher low. Kind of get where we're going with this? Take a look. This is pretty much what we will see in the market. Our low position, our high position, our higher low position, our higher high position, higher low, higher high, higher low, the highest point over here. And now we're going to have what? A reversal. Look, this also has an M pattern in it also too. M pattern symbolizes what? Market reversal. Okay, so we come down to our low, our lower high, our lower high over here, a new lower low over here, a new lower low over here, a new lower high. This is how we can make predictions of what's going to happen in the market. This is an example of an uptrend, our higher highs and higher lows. Think of it as a step case that we're taking the stairs all the way to the top of a building now. Okay, so we have our resistance over here. We have our support lines coming all the way up over here. So these would be our support coming up. This would be our resistance lines. And guess what? It's a great resistance line. Came over here, bounced off, came down, bounced off, came down, bounced off. And then guess what? We had a breakthrough. And now we come up to our new support line, which is over here. Our new support is over here until we do what? We get a breakout. And now this gives us our new resistance. So we have our support on the bottom, resistance on the top. We're bouncing back and forth. Ping pong strategy is perfect for this position right now, this particular pattern that's happening now. And then what we got? We have a breakout. So we broke past this support line over here, come over here, come down. Now this is our new support line. Now this becomes, this is our new resistance line. And this is now our new support line. So every time we break through the ceiling now becomes the floor. So we're here now at our support. This is our resistance. We broke through the resistance. This is our new resistance. This is our new support. Bounce back and forth. Broke through our resistance. Comes back down to our new support. Breaks, comes up, breaks through our resistance. Comes down. This becomes now our support. And we come all the way to the roof. All right, guys, I hope that kind of cleared up a lot of questions about higher highs and higher lows, support and resistance. I'm also going to do a video on support and resistance also too. So give a little clarification on that. Also how I like to mark up my charts. So if you guys have any questions, leave it in the comment section, like, share, subscribe, and thank you guys for watching. Have a great day.